Did Bitcoin just hit an cup and handle take profit range? In today's video, guys, I'm going to be taking a look at Bitcoin's technical analysis, sharing my thoughts and opinions on what I think could be happening and unfolding next for BTC. Let's roll the intro and get right down into it. Hi guys, welcome back to another update video, and today we are taking a look at Bitcoin paired up with USDT. We're on the 4-hour Binance chart, and when I was just taking a look at this chart this morning, I thought to myself, that looks very, very similar to something that could potentially be playing out. So let's jump into what is going on, right? We saw the breakout of the bearish ascending wedge pattern, which was fantastic. You know, guys, this was my concern, that we were basically going to bounce in between all of these high and these lows and then eventually get this big breakout to the downside or break down to the downside. And it's been great to see that we've had this clean break to the upside and we can kind of put that to bed. So great to see Bitcoin rallying and behaving this way round. It does not, of course, negate the idea that we cannot have a big collapse in the market, because I do believe we are going to be seeing that big move to the downside for BTC. I reckon it's going to be a good 40 to 50% correction. It really does depend on the stock market. If the stock market does get spooked the way that I think it's going to, then the Bitcoin spot ETF is going to dump hard. And well, they've been buying up a lot of Bitcoin, and that Bitcoin that they've been buying is going to come in here and flood the market with very little demand to actually support any buying pressure. Bitcoin is going to dump harder than I think it's actually rallied, which is going to be really, really surprising for a lot of retail investors. But nonetheless, that's a future problem potentially, right? We are here to talk about what's been going on most recently with this move to the upside and why I think this $64,000 was a key rejection area for BTC. So let's go ahead and show you what I was kind of looking at and thinking about this morning, which was this potential cup and handle pattern. It's slightly angled, which is probably why I didn't notice it straight away. But here you can see this cup and handle. Now, this cup and handle pattern targets out a very specific area. And if I go ahead and draw on our Fibonacci retracement tool with the extensions, you can see that our target was the 1.618 at $64,157. And of course, we got rejected right here on this wick, which I will go ahead and snap on at $64,000. I don't think that is a coincidence, right? So we could see that we were coiling up in the handle, and unfortunately I did not see this one in time. I did see us moving up towards kind of 55 and potentially even up towards 58,000, but the break up to 64 wasn't seen, and that's because I couldn't see this for looking until it was a bit too late. But nonetheless, a great breakout to the upside. But what does this mean now? Well, it means that we've already hit, or we've hit and taken out the take profit range for BTC. And well, from here, it's all now fair play. We need to see what happens next. And there's no patterns that I can see here that are basically telling me that we are definitely going to be breaking down or that we are definitely going to be breaking to the upside, at least not under the standard and typical kind of things that we'd be looking for. Now, this run to the upside and this particular break here is really, really interesting. It's interesting because we know that we got rejected from the 64,000 and we dropped down over 8% during that move. Let me go ahead and just make this a little bit bigger here. Okay, so it was a hard rejection here at 64,000 where we dropped down 8.28%. Okay, so we have our swing high at 64 and we have our wick low here at 58,700. Okay, so we dropped from 64 to 58,000 and it happened within, I think, minutes. Let me just go to the 15-minute chart here. You can see that it happens in 30 minutes, right? So within 30 minutes, we dropped down 8.28%. Now, a lot of people will tell you that, Bitcoin doesn't move down this way, right? Corrections like that are just, they don't happen. It's only up, 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 right? There's a lot of bullish people out there that they don't appreciate that within this 8.28% correction, crash, however you want to label it, millions of dollars transferred between hands, right? There were millions of dollars of liquidations, both on the rise to the upside at 64,000, liquidating a ton of shorts, and then dropping down to 58,000, liquidating a ton of long positions, right? People got wrecked on both sides. Bulls got wrecked and bears got wrecked all at the same time. So we have to appreciate what an 8.28% move actually does. And I don't think people really do. They can still look at the market in an incredibly bullish lens, even though we just saw an 8.28% crash in the market. Now, with that, that's quite interesting. It's interesting because we've yet been able to breach higher than 64,000. Now, we might be able to, and if we can, fantastic, because we are still potentially looking for that next lift to the upside, right? Now, if we follow this through the lens of like Elliott wave theory, for example, our real target range is going to be slightly higher here, just again short of the all-time high between 65,319 and 67,511. And we aren't there yet, right? So that's going to be one thing to keep an eye on. No guarantees, of course, but that's going to be the area of potential focus. Now, until we breach $64,000, the bears still have an opportunity to take us down deeper. And there is this area that we had highlighted before, which is also of interest to us. This is a previous area of resistance that we broke through and not retested, and it's at 57 to 58,000. Now, considering how we've kind of rallied here, I'm going to go ahead and use the fib tool. And I'm just going to move this across. You can see that, yeah, we end up with an overlapping pattern right here, basically between 57,200 and 58,400, where we might actually find ourselves with another correction to the downside. Okay, so from where we are right now, that correction would be another 7 or so %. It could be another quick move before we actually rally up to the higher range. So, for example, we might find ourselves doing a quick dump down here, liquidating those long positions, and then a rally up here, liquidating all those short positions. Okay, I wouldn't be surprised, because what we saw within this 8.28% move was essentially a lot of liquidity hunters, a lot of whales, and a lot of market makers making serious bank on the backs of retail investors who got absolutely wrecked, both shorts and longs, bulls and bears, both getting wrecked, and all that money flowing pretty much to market makers, liquidity hunters, exchanges. So we do know that this kind of move is, like gold dust to people who are just extracting liquidity out of the market. And I wouldn't be surprised if we see another move very quickly within a 15-minute crash down here. And then the next thing you know, you're all the way back up, preventing people from going long, and then basically liquidating all those shorts that were kind of using the 64K as their stop loss. I wouldn't be surprised. But let's go ahead and zoom out of this and take a look at it maybe from a slightly different perspective, right? So as we kind of take into consideration this move to the upside, it has been very, very interesting. Now, the overlapping nature of this is quite interesting to me as well. It does look like we're in the end game of this recent move. This recent move for Bitcoin is the one from $38,000 upwards to our 64K at the moment, right? So at the moment, we've rallied up 66%. But it does appear to me like we're in the end game. Now, why do I say this? There's a few different patterns and a few different reasons for this. There are Elliott wave theory, of course, which is overcomplicated for many people, but here we can see the idea of an overextension in their fifth wave movement. You can see it there. And then, of course, there's the market maker pattern. The market maker pattern runs like this. I'm just going to get some empty space here. You kind of have a move up, you kind of trade sideways, you move up, you trade sideways, you move up, you trade sideways. And then, of course, you go down, you trade sideways, you go down, you trade sideways, you go down. Now, this particular pattern, this particular pattern is all about liquidity mining or liquidity hunting, liquidity grabbing, extracting money from the market, essentially. You have these moves to the upside here. You have these kind of moves to basically cool the market off, reset it, and then another move to the upside. And during these movements to the upside, everyone believes that there's going to be a continuation to the upside, or retail investors believe there's a continuation to the upside, only to see these corrections where they believe, okay, no, we're going to reverse here. We are going to be rallying back up. This is just a correction. Oh, we're going to be rallying up. Honestly, this is just another opportunity to buy. And then, of course, they're all the way back down to where they were previously, and they're trapped in those positions, right? This is the market maker pattern because this is all about extracting liquidity from the market. Now, I tell you this because it happens from time to time. I actually draw on the chart properly. Let's get rid of all of that. I tell you this because that's exactly what we see happening here. I'm going to actually remove my trend lines now because I don't think they are needed. Okay, if I show you here, what do we see? Well, we can see a move to the upside, a sideways trade, a move to the upside, a sideways trade, a move to the upside, which means this is the next area where potentially we find ourselves just ranging and then dumping, ranging, then dumping, ranging, then dumping. Okay, and this potential market maker pattern is in play, meaning that liquidity is basically being mined out of the market, specifically being fueled, of course, by the Bitcoin spot ETFs. Now, obviously, there's a lot of different things going on in the real world and the stock market and Bitcoin spot ETFs. There's a lot of stuff, and I'm going to discuss some of that later on this evening on our Cheeky Crypto Uncensored channel. There is a link to that channel in the description below if you haven't already checked it out. And I'm going to be going through a lot of what is going on in the background for Bitcoin in some detail. So do check that video out. But for now, let me know what your thoughts are on all of this in the comments down below. And why don't you check out this video right here, where I'm seeing some interesting moves on Solana with some potential nice profit to be made if you are to be trading Sol.